Part of the reason why the baby boomers think they're so important is because they have been, and they still are. I mean, in the late 60s to the early 80s, they were coming of age. They drove consumption. That's why we had inflation then. In the 90s and into the 2000s, they had come out of their consumption phase. They were saving for retirement. That's why we had investment booms. And now our inflation, it's because they're all retiring. And we have a large generation that's just going away. And next decade, we have to pay for that. Yes, as you age, your net worth increases. And as you age, you become more adventurous with your investments, and that drives more economic activity. And then when you retire, you cash it all and go to T-bills because you won't be able to stomach any sort of market turning or currency turning. That's been true since the dawn of recorded history. There's nothing new there. What is new is the demographic profile has changed. So in a pre-industrial world, you had very few 60-somethings. You had more 50-somethings and yet more 40-somethings and on down. It built a pyramid. What industrialization and urbanization has done is change the shape of the pyramid. In some countries like the United States, it's more or less a chimney, but with a bulge for the baby boomers. In some like Germany, it's a diamond with more people in their 50s than their 40s, than their 30s, than their 20s, and then narrowing up as you would expect at the top. What's happening globally right now, not just with the American boomers, is that we've got this big cadre of people in their 60s who are moving into retirement, and they are a bulge in the structure. So instead of just a small group of people relative to the overpopulation that are moving on and changing their investment portfolios, we have the single largest generation in our history doing that. And on average, they will have completed that transition by the end of this year. So we go from having some of the richest, most liberal, most open, most liquid capital markets we've ever known to something that's a lot closer to the opposite in less than a year. But the problem here is we're losing the single largest worker cadre we've ever had, and the replacement generation down at the bottom of that pyramid, the Zoomers, they are the smallest generation we have ever had. Well, Gen X and Millennials have been in the labor market already. So we're already factored into the math. Now, there's pros and there's cons, and that shapes a lot of things, but we are already in. The Zoomers are the ones who are coming in to replace, and we have our largest generation going out, our smallest generation coming in. Annually, that's 400,000 worker shortage. And that will increase every year until 2034, when it'll peak at 900,000. These people are already born, they're already on the way. We know exactly what's going to happen to the net flows each and every year moving forward. But we're definitely entering a period of protracted and extended and increasing labor shortage. At the same time, we're entering into a period of protracted and extended and increasing capital shortage. And just to make it a little bit more fun, China's collapsing against this backdrop. So even if we decided we were fine with a completely globalized supply chain, we still need to double the size of the industrial plant in the next few years with less capital and with less labor. Well, the baby boomers at the height of their earning experience, as of the end of next year, this year, they won't be earning anymore. So the net inflows into the system from just normal demographic structure dry up considerably. The next generation down, Gen X, is very small. And even if we do succeed in having significant raises now in this labor inflationary environment, there aren't enough of us to generate nearly as much in total. So step one, we're losing volume. Step two, we're losing investment quality, because in the flight from risk on to risk off, the capital becomes a lot less interesting. This is going to be broadly decent for people who want to be in the government and borrow, because that's the T-bill. That's considered the ultimate gold standard. And to a degree, that helps with the mortgage market as well, because mortgage rates primarily draw their guidance from the 10-year as opposed to interest rate levels. After that, though, you're entirely dependent on capital flight from the rest of the world. It is the only meaningful method of exchange for international transport and trade. And the Japanese and the Europeans have basically signed on to a US dollar denominated system as part of the deal that generated the sanctions against the Russian central bank a couple of months ago. So if you're going to benefit from this in any way, the US dollar is the place to be, but you can't predict the inflows year on year of what's coming in from the European space or the Asian space. It will come when they're in trouble and we look good, and it will probably never go back. And so we know that the capital supply has to drop domestically, and we know we're going to get these bursts of capital from abroad, but planning on that takes a smarter brain than I have. So for the United States, we have a pretty big needle to pass through here, and And at the same time, when you get into the 2040s, the labor market will start reconstituting based on normal demographic factors, because the millennials' kids will then be entering the workforce. Everyone else went through industrialization and urbanization either faster or more intensely than the United States did. A couple exceptions, but only a couple. And so for them, they're looking at labor markets getting smaller every year and the capital supply getting smaller every year. And still in this decade, their advanced worker cadre, that big giant last generation, moves into retirement. I don't think China's going to survive long enough to have to wrestle with that problem. Finance doesn't work in China the way it does here. The Chinese will throw a bottomless supply of capital against anything in order to make sure that people have jobs. It doesn't matter if there's a product on the back end, really, as long as the people are working. So everything that people say about the US Fed is actually true to an order of magnitude higher in China. So the US dollar is the global currency. It's the medium of exchange. It's the store of value. It's the lubricant for the #1 economy and 2/3 of the top 20. The yuan is used just in China. It's not internationally traded, and they regularly expand their money supply by 5 times as much as we do. And at most times in the last 10 years, the yuan supply has been twice that of the US dollar, even though it's just not exchanged at all. They get their energy from a continent away. They don't have a navy that's capable of making that far in force in order to secure their own supply lines. So China is the country most dependent upon the US Navy to keep the lights on. In manufacturing, their demographics have aged so much already that China is no longer the low-cost producer for any manufactured product. There is not a product that the Chinese make that cannot be made in North America at a lower price point. Now, you have to build the industrial plant first. So I don't mean to suggest we can flip a switch and it's all here tomorrow.
Right.
But it does mean that anytime there's a hiccup in the Chinese system for any reason and somebody relocates, they never go back, because it's better with a shorter supply chain, with less energy, with less transport, with more efficient labor closer to home. There's not a sector where that doesn't work. And then in terms of industrial commodities, kind of an echo of what's going on with energy markets, they have to get it from half a world away. They can't go at it and get it themselves. They are completely dependent upon the globalized system as enforced by the American Navy. So any of these issues by themselves are country killers, independent of the demographic situation. And in the short term, I think we're seeing the whole system go belly up. I think it's safe to assume that most people have relatively formed opinions about whether the COVID vaccine is the way to go or natural immunity is the way to go. But I think if we're all really being honest with ourselves, we will admit that people on the other side of that divide have some relevant points that are worth discussing.
Yeah, sure.
And we certainly know that if you have both, you're in better shape. Neither of those are options in China. The Chinese vaccine doesn't work versus the Omicron variant, certainly not Omicron B. And because, in many ways, that the Chinese government was so successful at keeping COVID out these past 2 years, no one in China has natural immunity. So if they were to open up with Omicron B being the dominant strain, Omicron B is the most communicable virus we've ever faced, and it's the highest lethality rate of all of the COVID variants to date. If they just opened up, they'd have millions of deaths a month for at least 3 months. And in a one-man show government, that is how you bring the system down. So COVID lockdowns that affect entire cities, this is their only option for the foreseeable future. So Shanghai shut down on April 1. They reopened on June 1. They're in the process of locking down again already because Omicron is just so communicable. Masks don't stop it sufficiently. What is China if it's not a manufacturing center? Because that's all they have left. And now that is leaving very, very quickly. I think Apple's the best example there. Apple is the American company that has ignored the writing on the wall the most. And every time there's been a health issue with COVID or a trade war with Trump, they've ignored it and they've doubled down. So they are the American company most committed to China. Over 90% of the supply chains within China now. And as of last month, even they started looking for alternatives. Everyone is on their way out because China is no longer